A perfect investment opportunity is staring the world in the face, but only a select few truly recognize it. While most investors are distracted by short-term market swings, the smart money is focused on something much bigger, a silent arms race in artificial intelligence infrastructure. Big Tech just delivered a series of blockbuster earnings. Microsoft, Alphabet, Amazon, Meta, and Nvidia have all posted stellar results, raised their future guidance, and, most importantly, unveiled eye-watering capital expenditure plans. We're talking about tens of billions of dollars being poured into building the next-generation AI backbone. Where that money flows, demand will surge not just for the tech giants, but for the lesser-known companies powering this AI revolution, from chips and servers to data centers and cooling systems. But spotting this rare window of opportunity takes more than hype. It demands real research and a deep understanding of how markets and the economy work. With the majority of US tech giants having reported their first quarter results, the writing is on the wall. A massive spending cycle on AI infrastructure is about to begin. The only question is, will you see the signal through the noise? AI demand isn't just a buzzword, it's a rapidly accelerating market force. According to the United Nations Conference on Trade and Development, the global AI market is projected to skyrocket from $189 billion in 2023 to $4.8 trillion by 2033, a 25-fold increase in just a decade. PwC estimates AI could contribute up to $15.7 trillion to the global economy by 2030, surpassing the current output of China and India combined. Here's the kicker. The companies building the backbone of AI, those supplying the chips, servers, networks, and cooling systems, are about to see their sales explode as their total addressable market expands exponentially. In this video, we're diving into 3 companies that are the lifeblood of the AI revolution. These aren't just players, they're the non-negotiables, the hidden giants fueling the AI data surge. If AI is the brain, these companies are the nervous system. Ignore them and you're missing where the real money is being made. Let's kick things off with the first powerhouse on our list, Arista Networks, Inc., ticker symbol ANET. You might not hear Arista's name in mainstream AI headlines, but it's rapidly becoming the central nervous system of the trillion-dollar AI transformation. Arista isn't chasing the AI hype, it's enabling it. As AI workloads scale into the tens of thousands of GPUs, the real bottleneck isn't compute, it's data movement. That's where Arista comes in. Their ultra-fast, low-latency Ethernet switches, powered by a proprietary extensible operating system, are built from the ground up to handle the crushing demands of modern AI clusters. Unlike legacy networking systems, Arista's architecture is purpose-built for high-bandwidth, real-time data transfer across massive GPU deployments. Their CloudVision software suite adds automation, telemetry, and workload optimization. Exactly what hyperscalers need to keep AI pipelines running smoothly at scale. Arista is also shaping the future of AI networking through its leadership in the Ultra Ethernet Consortium, establishing new standards to meet the rising demands of AI infrastructure. This isn't just a hardware company, it's a critical architect of the AI backbone. The numbers speak for themselves. Arista just posted $2 billion in first quarter revenue, up 28% year over year, with earnings per share surging 30%. That's not just impressive growth, it's compounding dominance. From data center giants to federal agencies and Web3 builders, Arista is becoming the go-to partner for AI scale networking. And here's what makes it even more compelling. Despite its stellar performance, Arista still trades well below its long-term potential. With a $10 billion revenue target in sight, $8.1 billion in cash, and a recent stock split behind it, this is a company not just benefiting from the AI boom, it's engineering the rails it runs on. In the AI gold rush, Arista is selling the picks and shovels, and business has never been better. Next up, Vertiv Holdings company, ticker symbol VRT, a company right at the heart of an AI-powered megatrend that, honestly, not many investors are truly pricing in yet. If Arista is wiring the nervous system of AI, then Vertiv is building its beating heart, power infrastructure and cooling infrastructure for the world's most advanced data centers. Vertiv just posted stellar first quarter 2025 results with organic sales up 25% year-over-year and earnings per share surging 49%. While Wall Street, panicked over short-term concerns like margin compression and tariffs, the fundamentals told a completely different story. Demand is booming. Vertiv's book-to-bill ratio hit 1.4 times, and orders jumped 21% quarter-over-quarter. Their backlog has now swelled to a record $7.9 billion, providing a massive revenue cushion and long-term visibility as we enter a decade of data center expansion. Here's the real kicker. Vertiv isn't just keeping pace with the AI boom, it's enabling it. From hyperscalers to emerging AI players, everyone needs scalable power and liquid cooling systems. GPUs are getting hotter, denser, and more power-hungry, and Vertiv's next-gen cooling technologies, especially their advanced thermal and power management solutions, are becoming mission-critical. Despite this dominant position, Vertiv trades at just 26 times forward earnings, a bargain considering its EPS is expected to double by fiscal year 2029. Compare that to the broader IT sector, where Vertiv's growth rate is nearly twice the industry median, yet it's priced at a significant discount. The long-term thesis? The number of global data center projects has surged 60% in just 3 years, and we're still in the early innings of this infrastructure cycle. Vertiv's US-centric strategy, operational flexibility, and pricing power mean it's well-positioned to ride out tariffs and emerge even stronger. This recent pullback, that's not a red flag, it's a buy signal. When the world's digital engines overheat, Vertiv is who they call. Finally, we arrive at the crown jewel of AI infrastructure, Nvidia Corporation, ticker symbol NVDA. Nvidia isn't just riding the AI wave, it's actively shaping its future. While Wall Street debates valuations and export restrictions, Nvidia has quietly orchestrated a global pivot that could unlock tens of billions in high-margin sales. The recent partnership with Saudi Arabia's Humane involving the deployment of 18,000 Grace Blackwell GB300 supercomputers is just the beginning. Fully scaled, this deal alone could be worth up to $63 billion. It marks a crucial moment. AI sovereignty is going global, and Nvidia is becoming the exclusive supplier. And just as that news broke, the US government scrapped the AI diffusion rule, a sweeping export control that threatened to choke Nvidia's international sales. In one stroke, regulatory headwinds cleared, and Nvidia's sovereign AI strategy, enabling countries to build their own AI infrastructure, roared back to life. This isn't theoretical. Nvidia's ex-USA business is already growing at twice the pace of its US division, with global demand accelerating, not slowing. Now, freed from export shackles, the path is wide open for expansion into Tier 2 countries like Saudi Arabia, India, and beyond. Entire governments are betting their AI futures on Nvidia's ecosystem, from GPUs to NVLink, InfiniBand, and software stacks. Even with a stock price that's surged in recent years, Nvidia's valuation remains compelling. It's trading at a PEG ratio under 1, which is honestly rare for a company expecting over $200 billion in fiscal year 26 revenue and nearly 50% EPS growth. The street hasn't even priced in the full Saudi windfall, let alone the next wave of sovereign AI contracts. So while others worry about trade noise or short-term volatility, Nvidia is building a $1 trillion AI empire faster, deeper, and more globally than anyone else. Ignore the noise. This isn't just a stock, it's the infrastructure bet of the decade.